Anthony Grasso here, bringing you financial news you can use. In this video, I'm going to do a stock analysis on Workhorse. Is this company still a buy after losing the U.S. Post Office contract? Well, let's find out together. I'm going to go over a summary of the company, its product offerings, recent headline news, financials, analyst projections, and give it my buy, hold, or sell recommendation for both your short-term and long-term growth investors out there. And as always, folks, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you like to hear daily stock reviews and recommendations from an unbiased source. So let's get right into it. So Workhorse Group is a technology company, EV company. It's focused on providing solutions to commercial transportation sector and the federal sector as well. The company designs and builds high-performance electric vehicles and aircraft. As part of its solutions, it also develops cloud-based real-time telematics performance monitoring systems. The company is an original equipment manufacturer of Class 3 to 6 commercial-grade medium-duty trucks. The company sells its vehicles to fleet customers directly and through primary distributor Ryder systems. Its product includes C-Series electric delivery truck and package delivery aircraft, Horsefly. The Workhorse C-Series electric delivery truck platform is available in multiple size configurations, including 450, 650, and 1,000 cubic feet. Horsefly is an unmanned aerial system, which is a custom designed, purpose-built that delivers packages. Now let's go ahead and look at some of the news of the company. The biggest news that just came out regarding Workhorse that tanked the stock price today and yesterday is that the defense contractor Oshkosh Truck Corporation won a 10-year contract to build the next generation delivery vehicles for the United States. Now, defense contractor Oshkosh Truck Corp won that 10-year contract to build the next generation delivery vehicles for the U.S. Postal Service, beating out Workhorse Group. Now, day traders had driven Workhorse shares to record levels in recent months over the crazy valuation numbers on just $1 million revenue, anticipating at least a piece of the multi-billion-dollar contract would be awarded to the company. It was one of these finalists. The Postal Service delayed awarding the contract for several years after inviting 7 companies to build prototypes for evaluation. Now, investors, especially day traders on Robinhood platform and other platforms, led to Workhorse being among the 50 stocks that were trading that was suspended for being a meme hype stock during the stock frenzy. Now, this contract was for about 50,000 to 165,000 vehicles over a period of 10 years. So let's go ahead and look at some of the fundamentals of the company. Now, the current market capitalization of the company is $1.9 billion. That's kind of crazy right now. They're projected to have a revenue of only $1.9 million with a negative $209 million in earnings for 2020. Now, the earnings are forecasted to grow by 64% per year. But let's talk about the projections before the U.S. Postal Service contract was awarded to another contractor. In 2022, they were projected to be profitable with an estimated $311 million in revenue with a positive $266,000 in earnings. By 2024, they are projected to have $2 billion in revenue with a positive $269 million in earnings. That is a significant jump from what they are doing right now of only $1.9 million by the end of 2020. But since they didn't get the contract, you can erase those projections and move profitability from 2022 to at least 2023. Now, it has negative shareholders' equity, which is a more serious situation than short-term assets not covering short-term liabilities. And there's been significant insider selling over the past 3 months alone. But they do have stable cash runway. Workhorse has significant cash runway for more than a year based on its current free cash flow. And let me bring it back over here. Let's look at some of the valuation analysis over here. So based on the valuation analysis, because the earnings of Workhorse are not available right now for the end of 2020, we estimate it'd be 1.9 million. The price to sales ratio is the most appropriate valuation measure. The PE and the PEG ratios are not meaningful due to the company's negative earnings right now. Therefore, Workhorse seems highly valued with the highest price to sales ratio in the auto components industry of 876 times. Yes, this is a highly overvalued company. Now, looking at the profitability analysis, based on its gross operating and net margins, Workhorse has a cost structure that eats up a percentage of its revenues that is among the highest of any company in the auto components industry. To make matters worse, the company is losing money on an operating basis right now. How about the growth rates analysis? Now, Workhorse saw earnings decline in spite of positive revenue growth during the past 12 months. Additionally, the average company, the auto components industry, saw falling earnings, but at a slower rate than Workhorse. But looking at the financial strength analysis, Workhorse has a very weak balance sheet right now, highlighted by its negative shareholders' equity. Most likely, this was caused by cumulative losses, which negatively impacted retained earnings. Additionally, the company's debt load is greater than its assets, while day-to-day operations are losing money at the moment. And Workhorse has considerable financial risk to it. So what do the analysts say about this? Well, the analyst consensus right now is a moderate buy. The average Workhorse stock price target is $25 with a high estimate of $29 and a low estimate of $19. And it's currently trading at $15.96 or $16 a share right now. Now, going over an analyst report that I could find, a recent one, the CFRA report has Workhorse as a sell. The growth and valuation model subcategories are the two largest drivers of their sell recommendation. And yes, historically and currently, they have not been able to significantly grow, but you have to look at the macro political future prospects to really base any investment decision on Workhorse in the future. So am I a buy, hold, or sell recommendation on Workhorse? Here are my thoughts. Now, Workhorse missed the U.S. Postal Service contract altogether, and the company facing a very choppy supply chain situation right now due to the COVID-19 pandemic makes the company profitability move from 2022 to at least 2023, which is a year later than previously projected by the analysts. Now, Workhorse is trying to get its commercial EV business off the ground, and the post office would have been a big cornerstone customer of the company. The post office contract would have given Workhorse balance sheet, materials leverage, and major credibility in the industry. Now, the award would have been differentiated them from the pack. Management will now have a much harder time scaling the business in the future. Now, Workhorse CEO said this: "We can't predict the COVID situation right now, let alone in 2021. However, if the conditions improve and the virus is not a business issue for us or our suppliers going forward, then we anticipate 1,800 units in 2021. That's a significant increase from 2020. The Biden administration also plans to electrify its entire federal fleet of vehicles, which is a major boost for this company in the next coming up couple years." Now, Workhorse was the sole EV company bidding for the USPS business, but Oshkosh will offer battery electric versions of its gas-powered vans as well, and that's probably why they got the contract. And that when they had the Ford connection there, that was a whopping $840 million potential contract that they lost. That is kind of like a huge deal for Workhorse. Now, investors will get a chance to hear from Workhorse management when the company reports fourth quarter numbers March 1st. The company does plan to explore all avenues to investigate the bid process. Management said it will update investors when information becomes available. Now, investors have to examine the future potential for Workhorse to consider this in your portfolio. This was a hype EV stock that had a massive hit because of the USPS contract, but if you look into the future potential for Workhorse, you will see that if Biden's plans to electrify the entire federal fleet of vehicles goes through, there will be more potential for future governmental contracts that will be in play in the future. We have to be on the lookout for that. For long-term growth, speculative investors, I'm a long-term speculative buy on Workhorse, but there's a note of caution. This is a highly volatile, highly risky stock that will swing in either direction based on any news. It is also extremely overvalued, even at the current stock price of under $16 a share right now. I would wait until March 1st for the company to announce what possible future contracts will be in play over the next year or over the next 2 years. Without any good news about future contracts, this stock has a potential downward movement from $15, $16 a share to possibly even under $10 a share. I have a $20 a share price target over the next 12 months if they get other governmental contracts to outweigh the losing U.S. Post Office contract. I see huge potential for this company, but the U.S. Postal Service issue has put the brakes on the company's immediate potential to profitability in the near term over the next 2 years. More orders will roll out over the next few years from multiple other logistics companies looking to electrify their fleets, along with Biden's directive for its federal fleets amid the rising geopolitical pressure to cut carbon emissions. And Workhorse's revenues will soar from $1.9 million, probably over several billion dollars over the next 5 years. But that would be 2024, 2025. But that will take a couple years. So in the near term, there's going to be a lot of highly volatility. So this is only for the risk-prone individual who sees the future potential. So there you have it, folks. And as always, don't forget to smash that like button down below and consider subscribing and hit that notification bell if you'd like to hear daily stock reviews and recommendations from an unbiased source. Until the next stock update video later today, folks. Ciao.